Hello and welcome to another edition of 4 Minutes, proudly brought to you by Bennelong Funds Management. Tomorrow at the FBA conference, Money Management will be announcing its 2011 Financial Planner of the Year. Our managing editor Mike Taylor, who was also one of the judges on this year's panel, tells us more about what makes a winner. Take a look.
Well, Milana, the Financial Planner of the Year is recognition of the best among financial planners as judged by their peers. Now, whilst I'm on the judging panel, we are very reliant on past winners and people with extensive background in financial planning. So it's judged across a range of criteria, but at the end of the day, it's really about the quality of the advice that they give and the professionalism of their service. And in the end, when you look at all the winners over the last couple of decades, some of the foremost names in the industry turn up on the winners list, and that's something about which we're very proud.
Also on our front page this week, investment platforms move from consolidation to upgrades. The past week was marked by several high-level appointments, with Neil Younger moving from CBA to head up practice-based financial planning at ANZ, and Phil Butterworth going to BT Financial Group to head a new financial planning business unit. IOOF's acquisition of DKN has resulted in more high-level departures from the dealer group, with Lonsdale Chief Mario Modica, Executive Director Con Costas and DKN Distribution Head Andrew Rutter all leaving the company. Meanwhile, speaking at the ASFA conference, Financial Services Minister Bill Shorten said the industry needs to take a pragmatic approach to superannuation reforms, which he said were the result of robust negotiations and compromise. Also speaking at the ASFA conference, State Super Chairman P. Yash Gupta warned that super funds might find it difficult to set up financial planning teams without investing significant sums of money into infrastructure. Based on State Super's experience, building a team of 20 planners involves $3 to $4 million in one-off costs, as well as $10 to $12 million in ongoing costs. General Manager for Advice and Distribution at ANZ, Paul Barrett, recently warned that the introduction of things like fiduciary duty could jeopardise the takeoff of scaled financial advice. Barrett said there needs to be an environment where acting in the best interests of consumers would not involve heavy paperwork. And ASIC has imposed additional licence conditions on the AFS Group, raising concerns about the group's management of conflicts of interest when it comes to recommending clients switch to products associated with the licensee. Meanwhile, former Bridges Financial Services advisor was sentenced to 3 years in jail for defrauding his clients of $600,000. Challenger named its former CFO, Brian Benari, as its chief executive designate, while AMP's Steve Helmich will serve as the 2012 chairperson of the Financial Planning Standards Board Council before assuming duties as board chair in 2013. And finally, Paragem has sold its dealer services business to privately owned NetWealth platform. For all the details on those stories and to find out who was named our 2011 Financial Planner of the Year, make sure you pick up tomorrow's issue of Money Management. Thank you for joining us, and I'll see you again next week.